Good morning, my name is Adam from Dodjit.com and this is your video briefing for the 16th of November 2009. Well, basically nothing much has changed since our last video. You can see that basically we've now entered into this minor consolidation area around here. People are starting to think that we're going to receive a little bit of a double top around this area. We're going to have to just wait and see, really see how the markets play out. Now, on Monday, we received this massive positive candle. Tuesday, Wednesday, a few dojis. Thursday, we suddenly dropped lower as we touched our prior highs. This was quite expected. And then on Friday, we bounced slightly higher. Now, going forward, what's going to happen? Well, basically, we still aren't changing our minds at the moment. We are still in this bullish market. We're receiving a little bit of consolidation now, you can see. But the markets still seem like they are climbing higher. Now, in our last video, we stated about this end of year rally. We mentioned it will probably coincide with the markets climbing slightly higher. Our opinions still haven't changed, but you have to make note that the markets are going to be pretty volatile going forward. And the reason for that is because after this massive rally here that was basically backed by investors' expectations of economic recovery, and now that we've received all this positive economic data, we're starting to see signs that the economy is starting to stabilize out a little bit. And now that we've received all of this positive economic data, if you look in retail sales and all of the industrial sectors and stuff like that, we are receiving better than expected data. The problem is unemployment, and if unemployment doesn't start to slowly come down, we're going to have a real major problem. Now, if you look what happened with the last unemployment result, you can see that the result came out at 10.2%, but the markets climbed higher. Now, the question is, how much higher can they really climb, especially after this massive rally? Now, I just want to flip over for a second to the website, and I want to show you that if you want to learn a little bit more about unemployment, how it can affect the market and market cycles, so then what you want to do is just scroll down for a second and then just click on this report. Be careful, this rally is running only on fumes. Now, again, we are still bullish on this market, but you have to take into consideration here. This is the report; it's full of charts. But you have to take into consideration that after such a massive rally, and we've been rallying already for 8 months, I don't see that much strength going forward. If we are going to go forward, it's probably going to be very, very volatile. And that's something you want to take into consideration, because if we have got this one last leg left in this market rally, so then I think it's probably going to be volatile, because on every up move, people are going to start to wonder if the markets are going to start to correct, if it's a massive correction, if it's a change of the trend, and then there's going to be a lot of selling pressure like we're receiving each time that we're closing lower. Look at these candlesticks; they're massive compared to the bullish ones. Now, what I've just done for a second is just flipped over to the volatility index. We've stated quite a few times on the website that we tend to use this index just to see what's going on in the market. Now, what I want to try to do is I want to try to back my theory a little bit by showing you the volatility index. Because if you look carefully, you can actually see now that we are building this type of megaphone pattern, meaning that the range from the upper trend line to the lower trend line is just increasing. We're receiving this massive distance that is showing us that the range of volatility, the amount of volatility can be in this market. Look at this, we jumped from 20 points to over 30 points in just more than one trading week, and then we closed completely down. So you can see at the moment that this market is very, very, very volatile. And if we are going to start to now sell off, so then obviously the VIX is going to probably shoot up to roughly around 30, 32, which could probably coincide with our 200-day moving average. If the markets are going to climb higher, so then we could come down to test our 20 area. Again, use the megaphone pattern. So again, what are we looking at? Basically, the S&P 500 is now stuck in range. I think we are still going to climb a little bit higher. Again, you want to take caution around these areas. If you have been in trades, you have been following these videos, so then obviously you've been taking a lot of profit along the way. It's time to now take some money off the table and maybe let a small portion of that just rise a little bit. Let's see how it plays out. We've got this double top scenario, maybe possibly forming around this area around here. We're gonna have to see. We're gonna have to see how it plays out. Again, I am expecting one leg higher, but I could be wrong. Just gonna have to play it by ear. Now let's just flip through a few different forex charts. Basically, the euro against the dollar is trading exactly the same as the S&P 500. Nothing. It's like just a replica. It's amazing. We've got this trend line around here that we've received support quite a few times. We've got this double top scenario also around here. We can see 1, 2. We are climbing higher. I think we're going to stay in range a little bit this week. Let's see how it plays out. Obviously, a break above the 1.5062 will take us to the next level. You've got here also trend line support. So if we would break below that, so then we are looking at targets roughly around 1.4683. It could be a nice 150 pip trade. Again, it's a type of straddle at the moment because the markets have rallied so high, so we're not really sure how much higher they are going to go, even though we are still bullish on this market because the trend is telling us to be bullish. Again, just take caution and just expect that the trading days are probably going to be a little bit volatile. Moving on to our next pair is the dollar against the Japanese yen. Now, we've got on Friday, Japan's coming out with their interest rate decision. So this is going to be actually quite interesting because at the moment we are, let's just plot our Fibonacci for a second. We are now trading on our 61.8% Fibonacci level. Now, I also tend to add some trend lines in. You've got these trend lines roughly around here. So, it's going to be quite interesting because if we do break this going higher, we break our trend line, we might have a nice bullish position around here. Obviously, a drop below will probably lead us to our prior lows that we've already touched twice in the past. You can see 3 times even in the past. So, this is an interesting trade. Obviously, take into consideration that the US dollar against the Japanese yen is also a very, very volatile pair to trade. Moving on to the pound against the US dollar, we've got here major resistance. Now, we stated this breakout on the website and then unfortunately came down, touched our stop, which we had placed under the trend line, so it caught us out. Now, we're waiting a little bit on this. We want to see what's going to happen around here. But again, it does seem like it wants to climb a little bit more higher. Again, take into consideration you've got this margins of security, this false break around here. So it could act as a little bit of a problem. We would want to rather see it clear the whole of this area around the 1.6891. The last chart that we just want to show you guys is the Australian dollar against the US dollar. Now, this has been absolutely amazing. Look at this. We've got this trend line similar to the euro. It's just been bouncing off of it all the time. 1, 2, 3, 4, 5. And we are climbing higher. Now we are at the top or at our prior peak. So be careful around here. Let's see if it just presents a clear break. And if it is going to climb higher, so then you might want to check out the weekly chart because we are now heading back into a consolidation. That's it for now. I hope you enjoyed the video. Again, the markets still look positive at the moment, but you have to take caution because we've had this massive rally going higher. We can also see it here on the Australian dollar against the US dollar. And normally after such a rally, we're probably going to enter a little bit of a correction or consolidation. Take that all into consideration. My name is Adam from Dodjit.com.